Welcome. You're listening to The Best of Investing. I'm your host, Edward Brown. Our phone number is 888-912-1190. Use that number to answer the trivia questions for a 5-pack tanning certificate given away during this show. And that certificate is not sponsored by the radio station, but by Tan Bella Tanning Salon with 2 locations in San Francisco and 1 in Marin. And the certificates are worth over $100. So it's kind of a nice little gift that we're giving away here. And as I introduce our guest, it's kind of interesting because today's trivia theme just coincidentally happens to be basketball movies. And our guest today is Dan Lewkowicz of Encore Real Estate Investment Services. And actually the title of this episode that Dan came up with, not knowing what the trivia question is Nothing But Net. And we'll figure out what that means. Because it fits right into our theme. I'm going to read a little bit of what Dan gave me of his background here. First of all, well, before we do, okay, let me go ahead and do that. All right. So Dan is a seasoned real estate veteran with over 15 years of experience in many facets of the real estate industry. Starting his career house hacking, he quickly moved on to flip houses in and around Metro Detroit, and eventually created a company called Renaissance Real Estate Ventures, which specializes in the acquisition, financing, renovation, and resale of single-family residential properties in the booming city of Detroit, Michigan. Before joining Encore Real Estate Investment Services as senior director, Dan was a senior advisor at Fortis Net Lease, specializing in commercial real estate investment sales. He's also a former business development executive for Amazon in Detroit, Michigan. And currently he's a senior director of Encore Real Estate Investment Services, specializing in shopping centers, medical office buildings, pharmacies, quick service restaurants, and automotive repair and part stores. Hey, Dan, welcome to The Best of Investing. How are you?
Yeah, thank you so much for having me. I'm doing great, and I really appreciate you having me today. I'm excited to be here.
Yeah, no, this is terrific because you have quite a background in different aspects of real estate, and it's interesting because the title of this episode that you came up actually was Nothing But Net, and that explain what that means.
Yeah, so Nothing But Net obviously has a basketball connotations, which I am a basketball fan, especially in my earlier years. But in regards to, what we're going to discuss and what I do, the net here is a reference to triple net properties, right? So I am a net lease investment sales broker, which means that I sell properties that are typically leased out to national tenants on long-term leases. And in many cases, they're what's called absolute triple net leases, where the landlord has zero responsibilities. The tenant takes care of everything, including the roof, the structure, the insurance payments, the taxes, everything, management. So those are called net lease investment properties. So I thought that it might be a little clever or cute to call the title of this episode Nothing But Net.
Yeah, and you didn't know that our theme was going to be basketball movies. I thought that was kind of neat. So it's interesting. I'm familiar with triple net, which is typically the insurance, real estate taxes, and maintenance. But usually there's sort of an out with regard to the roof and the building for replacement. But you're telling me that these absolute nets cover everything. That's interesting.
Yeah, so it's interesting. I use the term absolute triple net because of this issue that is kind of going on here between you and I. So on the West Coast of the country, for some reason, they being the investment community and the brokers often refer to triple net deals as deals that you referenced, right, which have responsibilities on the landlord behalf for roof and structure, but really that's called a double net deal. So a double net deal is the same thing as a triple net deal. However, the roof structure and sometimes the parking, depending on how the lease is written, are the landlord's responsibilities. So in order to avoid this like East Coast, West Coast, New York Knicks, LA Lakers rivalry, so to speak, I like to refer to what we call triple net as absolute triple net, because then you guys understand that's what that is, and we understand that's what that is, and we're on the same page.
No, I like that term because that actually is a lot clearer when you say absolute triple net, because sometimes there's always that question, well, is this really the landlord's responsibility? And then especially like for what I've seen here on the West Coast would be, let's say if you're putting on a new roof, it's supposed to last 25 years. technically you would amortize that over the period of the lease, from the standpoint that, if a tenant, let's say, has well, let's say it's let's say the roof is supposed to last 30 years and the tenant has
Yeah.
15 years to go. Well, technically they would only pay for half the roof. That's one way to do it.
Right. And that's more, we see that more in multi-tenant retail properties where, there's a higher turnover of tenants, where the leases, indicate that, exactly as you said, if there's a piece of equipment like the RTU, the rooftop unit for the HVAC, if that goes and there's a certain number of years left, it's amortized so the tenant isn't, quote unquote, paying for something that they're not going to be using. But in every single triple net lease I've seen, it doesn't matter if the tenant is occupying the building and there's a roof needed, they have to pay for it, even if they're near the end of their term, which is something that's nice. And it comes up often. I mean, I'm doing a deal right now in Michigan where there's a...
Hey, Dan, I'm sorry. I just looked at my clock here. We don't even have time for the trivia question now. We're going to save that trivia question for the next segment. Stay with us. You're listening to The Best of Investing. Don't touch that dial. Welcome back to The Best of Investing. I'm Edward Brown, along with my special guest, Dan Lewkowicz. And Dan, I'm sorry, I had to cut you off for the break, but go ahead and continue on.
Yeah, so in this example, we've got a property that has 4 years left on the term, and we have a high likelihood of the tenant leaving for various reasons that we're not going to get into right now. But a new buyer is going to buy the property and go to CVS. CVS has not really been maintaining the roof and structure and the parking lot of the property per their lease. And he's going to go there, towards the end of the lease term and say, hey, CVS, you got to fix these things. It's written in the lease. CVS will probably put up a little bit of a fight, but hopefully this new owner will get a brand new roof and a brand new parking lot. And then when CVS vacates, they're going to have the advantage. They're going to be able to take advantage of that. So that's one of the nice things, is that the tenant is obligated to keep your building in tip-top shape, even if they're headed out of it.
Yeah, I know one thing that's been kind of interesting, again, on the West Coast on that double net versus triple net is if you're going to do, like, for a roof, are you replacing the roof or are you just repairing it? Yeah, because I mean, obviously, if you complete tear out is a complete replacement. But sometimes, you can just repair the roof in such a way that it's major, but it's actually not replacing it.
So these are the perfect example of potential points of contention between tenant and landlord.
Yeah, I just wonder in the West Coast if we could, we usually use, I think it's like the standard industrial lease one. I wonder, and they're triple net, but I wonder if you can actually, like, put it, I guess you could just make an addendum in there and change it. So this,
you can really, it could be anything. Leases, a lot of leases. That's why, like, it's important, as a broker, our role is very important, because very rarely are two leases the same. So if you're, entering into an agreement with a tenant, you could actually have your lawyer or yourself, draft up a lease agreement. And, I would often, that's why it's so important to work with professionals, because, like, if you're in negotiation, don't just take that standard lease that the corporate tenant is giving you. Send it to your lawyer, see if there's things that can be added or changed to protect you. Or, like, in your perfect example, wouldn't you as a landlord rather have a lease that spells out, in the event of a roof leak, the roof needs to be replaced, not just repaired? Something like that, to take away that ambiguity that could potentially, be a negative to you.
Yeah, because it's kind of interesting with these triple net leases where, forgetting the double net versus triple net, like certain things that are maintenance. Here's an example. If I feel like the building needs to be painted, well, what if I decide it needs to be gold leaf, such and such, and it's, $10 million to paint the building because, in theory, and that's kind of ridiculous. That's way out the mark. But
most of the leases, state the actual, like, you'd be surprised. They'll state all the way down to, like, the actual, like, Sherwin-Williams color that needs to be used. It's all pretty standard. So, like, situations like that, thankfully, we don't have to worry about too much. But there are, your example of the roof was a great example.
Okay, well, thanks. Let's first, before we get to a break, describe your journey as a real estate professional. Give us your background, how that happened.
Oh, that's a good question. So, I was always interested in real estate. My father's an entrepreneur. He's a pharmacist, owned pharmacies in Detroit. I remember as a kid going with him, he was looking into real estate investments, and just, like, driving to a property, and he explained to me, like I was like, why would you buy this building? And he's like, well, it's got a this tenant paying rent and this tenant paying rent, and in the back you see that cell phone tower, they're paying rent also.
Uh-huh.
So it's always interesting to me, this whole concept of like real estate investment. And I really first got, involved, I would say like when my in real estate investment took off, my career took off, is, when I was looking for my first home. This was during the last recession. And, I found a property that was, move-in ready, good to go. Made an offer on it, was hemming and hawing if I wanted, what I wanted to do. And then I realized that just a few streets over, there were some bank-owned properties. And I approached the bank and I was able to buy an identical property in far worse condition for about, 35 or 40% of the price, renovated the property. And now I had this beautiful, quote unquote, brand new property that I loved, and that made sense. And I really had this kind of like light bulb that went off in my head of, hey, this is a great opportunity to take something, add some value to it, and then have it be worth more than the sum of the parts. That really got me involved in a journey of house flipping, which is, how I got my start. I would buy properties in from tax auctions or foreclosure sales, or direct from owners, renovate them and resell them. And, that really got me interested in real estate investing and real estate as a whole. And eventually, with some stops on the way in corporate America, places like Amazon, I wound up, in brokerage, and I've just loved every minute of it. I've loved, just building a business and building clientele and helping people, doing deals, and having a good time and helping people make a lot of money.
Very good. Tell you what, we're going to cut to another break. And when we come back, let's see here. We've got some good questions. Now, we've already talked about what a net lease is. Why buy real estate? We haven't cut into that yet. And your thoughts on the current commercial real estate market. That's going to be really interesting to talk about. Okay, we're going to cut actually to our commercial break. This is going to actually be our first trivia question. We usually do it the week before. And again, Dan, if you know the answer, don't say anything until we get back. So first commercial trivia question is, which 2006 movie told the story of Texas Western College winning the 1966 NCAA National Basketball Championship? And I'm kind of curious to see if you know whose team got beat. A very famous now coach. Actually, I think he's retired now. And what Texas Western turned out, they changed their name. Call 888-912-1190. The first caller with the correct answer wins that tanning certificate, which is worth over $100. Also want to make a quick mention here. Stung tribute band for The Police. Instead of Sting, they call it Stung. Go to stunglive.com and check out where they're going to be playing. All right. Again, when we come back, our special guest is Dan Lewkowicz, who knows quite a lot about real estate, various aspects. You've done retail, commercial, multifamily, and you look like a young guy. The audience can't see you on the radio, but you look like a young guy. So that's pretty cool. You got all that experience. Again, we're going to ask the trivia question here, where the winner wins the tanning certificate. Which 2006 movie told the story of Texas Western College winning the NCAA 1966 National Basketball Championship? All right, let's see if you know the answer to that. Stay with us. You're listening to The Best of Investing. Don't touch that dial. We're going to be right back. Welcome back to The Best of Investing. Again, I'm Edward Brown, your host, along with my special guest, Dan Lewkowicz. Our first trivia question. Which 2006 movie told the story of Texas Western College winning the 1966 NCAA National Basketball Championship? Any idea, Dan?
Glory Road.
Glory Road. Very good. Very good movie. And do you know what they call Texas Western now? What it changed its name to?
I think it's in like University of Texas, El Paso.
Yeah, to UTEP. Exactly. And the team that they beat, I think it was I think it was Kentucky, but I'm not sure. I can't remember. But it was Pat Riley. He was a very, very good basketball. A lot of people just know him as a coach, but he was a very good basketball player. All right.
Yeah, he was. He was not only the New York Knicks head coach, but he was the inspiration for my hairstyle.
Yeah, that's true. That's true. So for the audience, I'm looking at a younger Pat Riley. That is so funny. All right. So let's, in fact, I want to get right into this question here. What are your thoughts on the current commercial real estate market? Because it seems like office is really getting hit hard, especially out in the major cities like New York and San Francisco. Go ahead.
Yeah, so I get asked this question all the time as a commercial real estate broker and also as a guest on a lot of podcasts. And, you know, the commercial real estate market right now, it's being hit by a lot of factors, like a lot of variables that are coming in and really shaking it up. And what's interesting is that, you know, most of these variables are human created or institutionally created, right? Commercial real estate market's been on fire for the last almost 15 years.
Yeah.
I feel like we you know, back in 1819, we were talking about how like we've reached the end of the runway, or there's maybe a little bit more runway, or, you know, if a real estate friendly administration is elected, things will continue. Yeah. It felt like we were at the top, and then COVID came, right? Yeah. And we had about 3-4 months of a market volume decrease, and then boom, things just took off. Anything that was an essential retailer, like your quick service restaurants, your tire stores, right, your grocery stores, things that I specialized in, those things, the cap rates, you know, went way down and the values went way up. And that's continued and continued and continued. And then all of a sudden we had, you know, starting in March of 2022, as everyone knows, we have this massive, you know, war on inflation, you know, that the Fed has been on, right? Raising rates at 75 basis points at a time. And, you know, if you zoom out and look at it, over a period of less than 13 months, the Federal Reserve raised the interest rates. The federal funds rate was raised from near zero to 500 basis points, right? 5%. Yeah. So they raised interest rates in not even 13 months, 5%, that's cataclysmic. That speed is so fast. And that did impact our industry. It did make kind of like a disjointed market between buyers and sellers because things shifted so quickly. What I will tell you from a broker perspective is that I'm hustling hard, I'm finding deals, I'm listing properties, I'm closing deals because that's what I have to do. Is the market slower? Absolutely. Is there a bigger disconnect between sellers and buyers? Absolutely. What will happen moving forward? Well, listen, it's really anyone's guess, but what I think is that once the Fed evens out these interest rate hikes and goes, let's say, for a period of 6 to 9 months without major interest rate changes, then I think the market is going to stabilize. And I do believe that we are in a very healthy commercial real estate market overall. And that's evidenced by the fact that we still are transacting despite everything that's gone on, despite these changes, these artificial changes in things like interest rates. So once rates stabilize, I believe commercial real estate will continue to do well. Now, as you alluded to, Edward, there are certain sectors that have been in trouble. I mean, it doesn't take much of a drive in any major city to see a tremendous amount of vacancy in old, outdated, you know, office buildings that are going to be very difficult to repurpose without a full scrape, just because of their construction, their configuration. However, that's opportunity. You know, I look at things like, you know, Bed Bath & Beyond. They just declared bankruptcy 2 days ago. That's opportunity for other retailers and other developers who want to come in there and backfill those spaces. So I see overall health.
I was going to say that I've actually heard that like in San Francisco, they're thinking about taking some of these vacancies in the office and turning them somehow into residential.
Yes, it's being done. It's being done. I mean, I could send you articles on different incredible developments. I mean, they've taken former Kmart, you know, headquarters and turned them into mixed use properties with multifamily and office and retail. You know, there's a lot of adaptive reuse going on. So, you know, don't be surprised to see some interesting things over the next few years.
Okay. All right. Very good. We're going to be cutting to another break here pretty soon. When we come back, want you to answer a question. What are the most important things a commercial real estate investor should do? That's a very good question, especially now. You know, with all these people working from home. I don't know. It's interesting. I think the wave is going to turn back again because employers aren't they already starting to ask people to come back to work?
Oh yeah. Yeah, there's definitely mandates from large major employers. The tide is definitely pushing in the direction of work from work, not work from home, and not even, you know, a hybrid model. So, you know, everything follows the big players, and the big players many of them have already said that they are mandating, you know, office attendance.
Yeah, exactly. Okay, here's our next trivia question here. We're talking basketball movies. Samuel L. Jackson starred in a 2004 movie about a high school coach in California, actually not too far from where we live here. Actually, it was in Richmond, California, who benched his entire team and canceled games because of their poor academic performances of the players. Which movie was this? Do you know this one? Ah, Dan does know this one. Okay, very good. All right. First caller with the correct answer, calling 888-912-1190, will win the tanning certificate, which is worth, again, over $100. I'll ask it one more time. Samuel L. Jackson starred in this 2004 movie about a high school coach in California who benched his entire team and canceled games because of the poor academic performances of the players. What movie are we talking about? Stay with us. The Best of Investing. We'll be right back. Don't touch that dial. Welcome back to The Best of Investing. One more time. I'm Edward Brown, your host, along with my special guest, Dan Lewkowicz. Second trivia question. Samuel L. Jackson starred in a 2004 movie about a high school coach in California who benched his entire team and canceled games because of the poor academic performances of the players. What movie are we talking about? Go ahead, Dan.
Coach Carter.
Coach Carter, yeah. Another it was very good.
And
movie.
I think that was 2005.
Really? Okay, well, it could be. When I looked up the question, it said 2004, but yeah, we'll have to look it up again. It's we won't penalize people if they don't know the year, but the answer, Coach Carter. That's what we're looking for. Okay, so Dan, before we forget, because sometimes I forget to do this in time. How do people get a hold of you if they have questions about commercial real estate?
So I'm very active on LinkedIn. You can find me there. You can, follow me and send me a message. My first name is Dan. Last name is Lewkowicz, Lewkowicz. Again, Lewkowicz. Additionally, if you want to reach out directly, you can call me on my cell phone, which is 248-943-2838. Again, 248-943-2838. If you want to talk about real estate, if you have a deal you just want an extra set of eyes on, if you have property you want to evaluate it, please, by all means, reach out. I'm happy to help and provide value.
And let me ask you, because you're in Detroit, right?
Yeah, Metro Detroit, yes.
Metro. So how is, I mean, I know Detroit, everyone's got this stigma of Detroit and Cleveland and all that. And I understand, Cleveland's been kind of up and coming. How is the Detroit market, both residential and non-residential?
So the suburban Detroit, outside of the actual city of Detroit, I think it's a great market. The residential prices have really risen over the last, they've risen for the last 12, 13 years, but significantly, even more significantly so over the last 3 or 4 years. Commercial market is definitely strong. As a net lease broker, one of my advantages is that I do work nationwide. So I list property all over the state and all over the country, which is great. I think that, ultimately I tell people, I've given classes on how to underwrite and how to select a specific, property. I always tell people that the demographics, the underlying fundamentals of the real estate, the proximity to other national retailers, the traffic counts, the ingress, the egress, the tenant, all that to me is far more important than the actual market, right? The actual market plays a role, but I'd rather have an A+ located, strong franchisee guarantee, good access, high traffic counts, high visibility property, in a lesser market than something that doesn't have those qualities in a quote unquote stronger market.
Okay. And by the way, on a personal level, are you a big Lions fan?
I actually never was into football ever in my life. And then my father-in-law is a big football fan. So when we go over to his house, he lives very close. We started watching like Michigan games and Lion games. Yeah. And I really got into college football this year for the first time. Like I'm a guy that hated football, but I gave it a chance. And I'm like, oh, this is kind of cool.
Well, yeah, my daughter-in-law comes from Ann Arbor. And
very nice.
And then it's interesting. Nice. The reason I mentioned the Lions is because Jared Goff actually grew up literally a few miles from where I live.
Did he really?
Yeah. So he obviously made his name in Cal, and then at the Rams, and then he kind of turned Detroit Lions around a little bit there. Very good.
Yeah, I feel like Lions fans deserve some kind of victory. Like we almost made it into the playoffs this year, but like the Lions fans are like the epitome of a symbol of hope.
Yeah.
You've got fans that are diehard fans, have been rooting for an institution that's been just terrible for so many years. They deserve the victory. We deserve the victory.
Well, it used to be,
to the football powers that be.
Well, and that's the way the Chicago Cubs used to be until they finally won. I mean, I remember when I was a kid, the Lions actually were a pretty good team.
Yes.
They had guys like Alex Karras. I mean, Bobby Lane was before my time, but they had some pretty. And then the best running back of all time. I mean, I used to love O.J. Simpson, and then when Barry Sanders came along, it was like, as good as OJ was, Barry Sanders. I mean, he was like a magician.
He was fun to watch. Yeah.
Oh my gosh.
No doubt.
And for those younger fans out there, go ahead and look at Barry Sanders highlights. I wish he would have stayed in a little bit longer to get the last record that he just didn't play that last year. He would have gotten.
I know.
Okay. So the most important things, and in fact, we should talk about, because my old company foreclosed on a resort in like a campground resort. I don't know if you handle those sort of things, but that's a special.
I did sell some resorts recently in Traverse City, Michigan. So yeah, I can definitely help.
Okay, we'll talk about that. All right, let's see here. We got another minute that we can talk about. So was there anything else that you wanted to cover before we get to another break?
I mean, I'm open for anything that you think would be of value to your listeners.
Okay. So in looking at the commercial real estate, we all know about location. That's always going to be important. It's interesting because I've owned a building since 1994, and I have a low basis in it. And we've as a family, we've talked about what to do with the building. But the thing is, if I sell it, I'm going to have to pay too much in taxes. And if I try to 1031 exchange it, I'm going to have to learn a new building. Whereas this building I know fairly well. So it's kind of
that's true. I mean, there's trade-offs. I mean, what I'll tell you is you probably have a substantial amount of equity built up in the building that you could then deploy, especially if you use leverage. And you can buy something that's not hard to quote unquote learn. Like maybe a single tenant deal or a couple single tenant deals where you're much more hands off. In terms of your ownership, that could be a potential exit.
Yeah, no, something to think about. Okay. We're going to cut to our last trivia question here. We're talking basketball movies, and you are a basketball fan, right? I guess you've got it.
That's right.
Yeah. Of course, your Pistons didn't do too well this year, did they?
No, but listen, I'm like, I grew up with the bad boys, so it's like,
oh, you did.
Anything that happens today.
I was going to say, I don't know how old you are, but yeah, I mean, when they had actually when Dennis Rodman was there and Lambeer, he was the guy everybody loved to hate.
Lambeer, Isaiah Thomas, Joe Dumars, yeah. I actually ran a basketball camp when I was younger, and Isaiah Thomas and Joe Dumars sent their sons there, so they would come hang out at the camp. It was really cool. As a kid, to see those guys was so cool.
That's awesome. All right, our third trivia question. Will Ferrell played, and now actually I did not see this movie. Will Ferrell played a singer who used the profits earned by his only hit single to purchase a basketball team. What 2008 basketball movie was this? All right, call 888-912-1190. First caller with the correct answer wins the tanning certificate. Stay with us. The Best of Investing will be right back with some closing comments. Don't touch that dial. Welcome back to the Best of Investing. Last time for today, I'm Edward Brown, your host, along with my special guest, Dan Lewkowicz. And our third trivia question, Will Ferrell played a singer who used the profits earned by his only hit single to purchase a basketball team. What 2008 basketball movie are we talking about?
Wasn't that called like semi-professional? Semi-pro.
Very good. 3 for 3. Good job, Dan. All right. So we've got a few more minutes before we have to cut out for today. So can you give us some tips for the audience?
Yeah, I think we were talking off the camera here about, for investors in terms of tips that they should consider when purchasing commercial real estate. And, I would say like number one is stick to your fundamentals, whatever those are, whatever your principles are, whatever your investment guidelines are, stick to them. Don't try to make a deal work. The second you try to make a deal work that, because you want it to work, but it doesn't really work, that's the emotions getting involved. And we really want to stay away from that as commercial real estate investors. I think number two is never be shy about getting another set of eyes on a deal. Like I always tell my clients, I don't care if you find a deal off market from a friend. If you want to show it to me and just get my opinion, I'm always happy to tell you what I think, because, two sets of eyes are always better than one. There are nuances in leases and in rent rolls and P&Ls that some person might not pick up on and the other one, will. So it's very important. And I would say like it's another piece of advice is make sure that you have solid professional advisors in your network. And that means people like CPAs, attorneys, commercial real estate brokers, very, very important. And that's one of the things that I do for people is that in addition to my underwriting and analysis and marketing and deal negotiation, et cetera, is I'm a resource, right? So when my clients or people reach out to me and they say, Dan, I need an attorney, but I need this type of an attorney, or I need a CPA, I need this type of a CPA. I have people that I work with on a day-to-day basis that I can make referrals to. So it's so important to have people like that in your network who can help you and provide value.
Yeah, did you get involved, or what do you think about cost segregation? That's a fairly somewhat new, in the last few years type of thing, where basically you just it's a way to accelerate the depreciation, I guess, right? Right?
Yeah. So commercial real estate depreciates. Most forms of commercial real estate, by the way, something like a ground lease, which is essentially ownership of the ground and not the building that sits upon it. There's no depreciation there because the IRS allows you to depreciate building, but not ground.
Yeah.
So, most forms of commercial real estate are depreciated on a set schedule. And as you alluded to, Edward, that can be accelerated through cost segregation. So, my experience from what I know, if you own a property that's worth more than $1 million or $1.5 million, it's probably worth doing a cost segregation study because there's an expense involved to see, if it makes sense to, do some accelerated depreciation. But yeah, it's a tool that our clients use all the time, and it's definitely something to consider.
I think I've owned my building too long. It doesn't make sense for me now.
Oh, it could be.
Yeah.
How long have you owned it?
Since '94. So that's
you've owned it about 30 years.
30 years, and since it's
you're at
a 39-year schedule. So I'm kind of running out of depreciation. I gotta invent some more. So Dan Lewkowicz, again, give out your information one more time. You're a wealth of knowledge. I really appreciate you being on the show.
Yeah, thank you so much. It's my pleasure. So again, my information, Dan Lewkowicz, Lewkowicz. Again, Lewkowicz. Very active on LinkedIn. You can connect with me, reach out to me there, send me a message, or give me a call on my cell phone at 248-943-2838. Again, 248-943-2838.
And I apologize. I should have pronounced it Lewkowicz instead of Lewkowicz. I apologize for that.
All good.
That probably happens. Okay, you ready for our thoughts for the day? So a guy tried to sell me a coffin. That's the last thing I need. And my wife threatened to leave me because of my filthy, disgusting habits. I was so shocked, I nearly choked on my toenails. Oh, I'm sorry. That's a bad one. Okay. Tune in next week to The Best of Investing. We're going to be giving away more free prizes for answering trivia questions. Thanks for listening. On behalf of our team, I'm Edward Brown, wishing you the best of investing. So long.